IT2 has looked weak with Infi and HCL Tech being amongst the top 10 losers. That ICICI Bank and HDFC Bank are in the red, are not helping. What is thwarting that? Big move in Adani Enterprises, Tata Consumer. So FMCG making a little bit of its presence felt because seeing both Tata Consumer and Britannia amongst others in the green. And there's some strength in autos too with Maruti and Hero MotoCorp and Bajaj Auto coming out in the green. So all in all, Hersh, you might have a happier picture to paint on Choti Diwali simply because the broader markets are actually done really well for themselves.
Chota stocks have done well, and that's exactly what's reflecting in the breadth as well as in the Nifty mid cap and small cap. That's where we are where the mid cap is concerned. Small cap also 1% or so higher and holding on to that 1% gain. That's more important, at least in my view. Let's look at the advanced decline as well, if we can. And there you go. So the breadth of the market still as solid, largely protected in that sense, even though the Nifty giving up a large part of those gains. Let's though focus in on specific names because lots of earnings and therefore lots of names to talk about and lots of buzzers. More in the green than in the red, as the breadth really suggested. Let's pull up some interesting ones. Force Motors locked in upper circuit, 20% higher. Capri Global, good asset quality in a tough quarter, 14% higher. Some of these stocks really getting rewarded where there have been concerns and where the market sees that a lot of those concerns are insulated. So that kind of gain playing out. Marico up 3.5% as well on the back of a good set of numbers in a tough quarter. Redington is the other one, up 7%, good, or rather 9% now. Good commentary. More than just a decentish quarter. And Lakshmi Organics up 7%. Updata Services, we also had a BNK note initiating coverage on Updata Services, 7.8% higher. You're also seeing good traction on something like a GHCL, HCC, eMudra, good numbers again, Websol, TD Power and Paisalo. Paisalo came out today, good set of numbers, and the stock really getting a thumbs up from investors. What's not done well shall be Honeywell under some pressure as well. Hitachi under pressure. Honeywell, of course, on the execution side. Some worry with the product mix, therefore keeping a lid on margins. And you also have a Cipla and a Voltas. Lower Voltas margin recovery Q1, again a softish Q2. So really need to understand as to how that improvement with regard to margins towards double digits, if not double digits, how quickly is it going to go? Blocks on these three stocks, Idea Ford, Jyoti Structures, Redington, and on the back of that, all these three flying. You also have a Torrent Pharma where there was a block, but that will come up just on your screen. Paras Defense, Ordwin, 361 fundraise. You also have Torrent Pharma holders selling roughly 3%, and you have a JTL Industries which has announced capacity expansion up 3%. So lots of them.
Indeed, and in fact, therefore, happy hunting ground if you indeed are a bottom-up stock picker, and that's what we're going to try and do today. Shivangi Sarda, analyst equity and derivatives and technical at Motilal Oswal, as well as Ruchit Jain, who's the lead analyst at 5 Paisa, joins in right now with their thoughts. Both of you, thanks so much for joining in. Shivangi, interesting hairdo, looking very nice. Thanks so much for joining in, and give us a sense of how are you trading the indices today?
Thank you so much, Niraj. I think the festivity, the look has kicked in. But yes, of course, the indices look quite positive. Somewhere there is some sort of support-based buying, and, the festive cheer is being able to see in the market as well. But the good part is that, the index has taken a good support near 24,150 levels. Wherein good buying interest was seen at those levels. So here onwards, we are expecting some sort of a pullback move over here. But then again, follow-up is missing in the action. So we would recommend buy on decline, but the upside will remain capped for Nifty. We are expecting some sort of volatility to continue even next week because of the election, euphoria that will get an overhang in our Indian markets as well. But overall, we are expecting, Nifty to, touch around about 24,500 immediately. And then if it manages to hold and cross above these levels, then 24,750 is next on the cards. with a support of 24,150 levels. Now, contrary, Bank Nifty is doing comparatively well, and we've seen that this has been led by mainly heavyweight private banks and the comeback of the PSU names. So comparatively, Bank Nifty is a stronger bet here. Now we are recommending buy on decline here to continue. Yesterday we saw a massive rally and the comeback of the bulls. Now next we are expecting 52,500 for Bank Nifty with a support of 51,450 level.
Well, quite bullish on that one, a percent plus in terms of upside here on the Bank Nifty as per Shivangi. But let me come across to Ruchit. Ruchit, what's the sense with regard to the Nifty and the Bank Nifty?
Yeah, hi, very good afternoon to all of you. Firstly, let me take this opportunity to wish you and your entire team and all the viewers a very happy Diwali.
Wishing you the same, Ruchit, from all of us here.
Yeah, thank you. Yes, coming on to the markets, I think this entire month of October has seen a price-wise corrective phase, which has been mainly led by FIS selling. But the data has changed a bit in last couple of trading sessions, at least in the index future segment. Although they have been selling the cash segment, but in index futures, where a couple of days ago they had a long short ratio of about 32 or 33 odd %, that is improved to 40% because they've covered some of the short positions. And technically also the RSI smoothed oscillator that we track are near the supports. Post-COVID fall, where we witnessed a very sharp fall in the month of March 2020. After that, whenever there have been corrective phases in the market, the RSI smoothed oscillator has taken support around 20, and we have resumed the uptrend from then. So right now, that RSI is right now trading around 20 to 22 levels. So I think we are around that support, and hence a pullback move, at least if not a resumption of the uptrend, should be seen in the near term, because the index future selling has also stopped over here from the FIS. So we expect an up move towards 24,700 in the near term, which should be seen. Now one need to be very stock specific, because the mid cap and the small cap space indices are not showing signs of bottoming out. So this may just be a pullback move and not a resumption of the uptrend. But at least if one is trading for the short term, then one should trade with a positive bias for levels around 24,700.
Okay, and Ruchit, your picks for this afternoon?
Well, for now, I have only one pick today, which is in a buy call in Ultratech Cement. So the stock has taken support around its 200-day moving average. Volume-wise, if we see last couple of trading sessions, the volumes have improved along with the price up move. So the signs are much positive over there. So Ultratech Cement can be bought at current levels with stop somewhere below 10,900 for potential targets around 11,750.
Shivangi, let me come to you with regard to your picks this afternoon.
So for the technical picks, I've chosen the first one from the IT space, Coforge, which is holding quite well. And even on the weekly basis, we've seen that this stock has been one which hasn't taken a dent despite the market volatility. There has been a good price volume surge that we've seen earlier this week, and good buying interest continuing at the higher zones. So recommending a buy here with a target of 8,100 levels and a stop of 7,650 zones. Now, the second pick, the idea would be Titan. This is somewhat of a, bargain buying over here. This correction has given a good chance to accumulate the good names, and Titan is recently negating the weekly lower top, lower bottom formation. And, currently we see that these quarters seasonality-wise are very good for Titan. So this is definitely one stock which can be kept on radar, and good buying interest is emerging. With a support near 30 to 20 odd levels. So this is one stock which is looking quite lucrative. Now recommending a buy here with a target of 34.30 levels and a stop of 32.30.
Okay, thanks for that, both of you. Shivangi, let me come to you on this one. Among the Nifty 50 counters, you are seeing good traction in the Adani twins. A lot of constructive commentary also coming from analysts. Quick caveat, NDTV is an Adani Media Group channel. But nonetheless, the commentary being very, very constructive with regard to how H2 is likely to shape up, and how, especially in ports, 9% is the growth that we've seen in H1 for the country, for the market, for the industry. But Adani Ports has grown at 18%. Shivangi, just on charts, constructive on either of these names?
Seen there has been a good amount of movement in Adani Enterprises as well from the last 3 trading sessions. And Adani Port is also kind of, giving a good base over here at 1400 levels. So, till the time it manages to hold above 1400 levels, we could expect a good up move towards 1450 odd levels here. But it is important to hold above 1400 levels.
Well, okay. Let's focus on the stock of the day. Though the mid-cap space is doing, or the non-Nifty space is doing okay, Honeywell isn't. That stock has sunk today after it reported comparatively weak earnings and arguably the stock at very high valuation. So, Anushi, why this 7.5% downtick? Anything in the commentary or the presentation which also causes concern?
Niraj, so if you have to look at Honeywell's numbers, first the Q2 numbers, 7% of a revenue decline that we are looking at 1,024 crore, while EBITDA also similar to revenue decline has seen a 7% of a downtick. Margins more or less stayed in the similar range of 12.6% as compared to 12.5%, and net profits are about a 6% growth. The main crux of this Honeywell automation that we are looking at is the disappointment is on the back of the exports number that has been seen. So if you just take what some of these brokerage are saying, one is Nomura on Honeywell, which do note continues to maintain a buy rating, has seen about a 24% of an upside. They think and believe the margin disappointment was led by a inferior product mix along with some sluggish exports demand, which due to which we are seeing the kind of numbers that it is. However, H2 remains as a watch out for these margin recovery levels with uptick in exports expected. Revenue, EBITDA and PAT CAGR growth at 16, 25% and 27% is expected in the next 2 to 3 years, but it all holds on to the export improvement which is to take place in the H2. So that remains as a focal point. Other than that, if we see the companies, what the company is saying and their outlook, their battery energy storage system continues to hold a significant potential for Honeywell over a long term. So that remains on a watch out for. But on the contrary side, we are seeing a complete opposite view from Nuvama, wherein they have retained the reduced rating and they're seeing a target price of 40,500, which is about 17 to 18% of a downside from yesterday's levels. If last few quarters they've been noticing that Honeywell automation has been a laggard, and this is on the back of the valuations that they command. Also, the low exports and competitive intensity is not helping the margin profile that we are seeing forward. Even this quarter, the margins remain net to net flat. So, despite the revenue growth expected in the next 2 to 3 years, about 15% of our revenue projection they've given for the next 3 years, they see no meaningful upside for the stock at the current level. So this is what is happening. A weak export demand picture scenario is what is mainly tracking this, along with high valuations for the company.
Certainly looking slightly wobbly today. Anushi, many thanks for that. Deven Choksi is with us as well of DR Choksi Securities. Deven, good afternoon and happy festivities to you. We just starting to talk of Honeywell and kind of brings to mind what's happened to some of the more expensive stocks when there has been a growth scare this quarter. I think Honeywell fits the bill as well. I'd love to know from you, some of these MNC, cap good, power space exposed companies which are trading at premium valuations, do you see a bit of a risk in those if indeed there is a general growth slowdown and therefore the probability of earnings misses are higher?
Yeah, good afternoon, Niraj, and wish you happy Diwali and the festivities as well.
Thank you.
Well, I think my understanding is a little simpler in this particular subject. In the current financial year, the entire program of government spending got delayed because of the election which completed in June, and ultimately I think the expenses of the budget which came up I think in the month of July, and thereafter the monsoon season. So this quarter in the first half of the financial year comparatively has remained I think a slower one. But having said that, government budget and the allocations and the program for spending is continuing. So understanding after talking to various companies, we find that I think the third quarter and fourth quarter may not be as bad as what one has seen in the second quarter, save and except some sectors like auto. But rest of the places, I think the government program for infrastructure is continuing. Given that situation, whatever I think the observations currently that we are finding of little slowdown in capital goods segment particularly, I don't think that is a permanent feature. That's the first point. I believe that the ultimate growth in the business with the higher amount of contracts that the companies are receiving expected to, I think, materialize in the subsequent quarter. And with some degree of changes in the numbers, probably I think you are likely to see higher amount of growth hereafter. So if the companies have been quoting at a premium valuation based on the growth prospects, I just want to add that I think these growth prospects have not gone away. They remain in place. Of course, the premium valuation cannot sustain on high base effect, as we have discussed even previously also. So certainly, I think with this high base effect getting absorbed, the valuations are expected to get rationalized. In a simple term, probably we are likely to see more of a time correction than a price correction in individual companies.
Okay. Ruchit, let me come to you. Quick views with regard to this one, 7% lower.
The stock has breached its important 200 DMA support today. So I think that's where we can expect some relative underperformance in the near term. 47,200 was the important support which has been breached. So we can expect some more correction towards 42, 43,000 kind of range where the stock could see some stability then. But at least from a short-term perspective, I think the undertone would remain a bit cautious.
Okay, switching focus, but sticking with earnings nonetheless. Indian IT products distributor Redington reported a 3.5% fall in second quarter profit on Tuesday. Slowdown in demand, of course, was one of them in the personal computer space especially, and in phones, and in some of its international markets as well. Margins have also taken a bit of a dip, now slipping below that 2% mark. Group CEO of Redington, who talked about the margin recovery as well as what one can expect going forward. Listen in to a slice of that conversation.
Clearly, this is one time, as I mentioned, there's some reprioritization of IT investments and some inventories that we bought for back-to-back for those government deals. And it's a one time. We are going to correct this back in the coming 1 or 2 quarters, and you'll see that rebound back. The other two factors I mentioned, large deals will continue, and this quarter the momentum of mobility business will continue, but we'll definitely see a uptick on gross margins and profit percentages as some of this comes back. And the growth rates have been good as well. I should mention that both India and UAE, the largest markets for us, constituting almost 60% of our business size, grew at 25% and 24%. And all our business units, the 4 business units we have across mobility, PCs, cloud, and technology solutions, all had double-digit growth.
Right, Devin, let me come straight to you. Double-digit growth, of course, but margin sinking, revenue down, EBITDA down 5% odd. Do you like Redington as a business from a medium-term perspective? Would this at all feature?
Well, I think the business per se is not bad, but the fact is that I think this business have had the history of earning lower margins, and now if one has to look ahead, I think that particular process will continue. I don't think that materially things are changing, except the fact that I think the overall scenario in the industry remains upbeat with the kind of higher amount of business activity continuing, particularly relevant for this company. So in my viewpoint, I think the margins may remain softer, but I think the top line will continue to remain steady to higher levels going forward as well.
Mm-hmm. Okay. Well, that's as far as Redington goes. The other thing is what's happened to a clutch of high-flying stock movers in the session today. One of them, since we're talking of flying, is SpiceJet. Has had a bit of a recovery today. So it's just that kind of a day wherein a clutch of stocks have moved up, even if the Nifty is down. SpiceJet is up 6%, trading at about 60, 61, in or around the pricing at which the QIP was done as well. Now, what is Indigo's pain SpiceJet's gain, or is there more here? Devin, any thoughts here on SpiceJet?
Well, not completely aware about, why 6% rally has happened in this particular stock today, but what I believe is that somewhere the disappointment in Indigo is now transferring funds into the other stock. That is what is understood. But it's very difficult to, get into this particular space per se, Niraj, because I have been very categorical about it that I think a business in which 50% plus amount of cost is assumed by the fuel, and if that particular fuel, the tinkering of the pricing and everything takes place through the government, I think not one is not very sure as to how exactly one should read this business. Like this morning, we read about the blended ETF, and I think the costs, the tax reduction in the excise duty from 11% to 2%. Now, blending part of the in biofuel blended into the petroleum, I think is in itself, I think is an affair, a costly affair for that matter. And if that cost has to be absorbed by the companies, probably I think they may have to either pass on the cost to the consumer or may have to absorb that cost. One is not very sure about how to read this business. Though on one side, I must say that the prospects remains absolutely very clear about the growth because more number of passenger seats are being occupied. But I am not too sure, I think, whether it converts into profitability for the companies.
Okay, fair call. Well, that's as far as SpiceJet goes. Actually, Shivangi, anything on aviation? I mean, Interglobe Aviation sank and then has stayed lower. Any thoughts here? Or a SpiceJet if you track it on the charts? Shivangi, the question is for you. Okay,
First thought that comes to my mind is, of course, Indigo. And we've seen that the stock has sank, a little bit from the last 2 odd weeks. But then again, I believe there's some sort of buying interest still yet to emerge here for the stock to sustain and again pick momentum. So little wait and watch for these stocks at the moment.
Okay, fair call. Well, Shivangi, quick one. A long-term idea. You've given us short ideas. We won't see you around the Samvat period. So one long-term idea on the charts, derivatives, what have you.
So definitely long-term idea, would be one from the jewelry and gold-related space that I mentioned earlier. Titan is something which is looking quite lucrative at these levels because it's trying to bottoming out at these levels. And good bargain buying here, good stocks have been, seeing some sort of a Diwali discount now after this correction. So I think this is the perfect time to add and accumulate these kind of stocks here. Now, Titan is looking quite positive even for the long term. And, the kind of sustained move that we've seen around 3,300 is, giving a signal that the stock is ready to move. And if we talk about the long term, the target would be around 3550 and then 3600 odd levels. And 3150 would be an important support to watch out for.
Shivangi, many thanks for joining in today. Really appreciate your time. To you and yours, a very happy Diwali and a prosperous New Year. Really appreciate your time. Well, the other one to focus on is Maruti. And before I get Ruchit in on this, let's hear a view coming in from Mr. R.C. Bhargava talking about the demand trends in rural markets and outlook on premium segment.
No, that of course has affected the profit after tax, the indexation ratio. But if the market is growing only 3% and we are growing 3%, and if we have had a situation where we had accumulated volumes because we thought we'd be selling more cars, therefore the promotion costs and the selling costs of cars have gone up, there would be a hit on that. But to an extent, we have remedied that situation. It'll start only getting better in the third and the fourth quarter. And in future, we hope we don't get into a situation where we produce more than what the dealers can sell. Instead of looking at the whole numbers of wholesale to the dealer to determine market share and sales and all that, we will now in future only look at the retail sales and ignore the wholesale numbers. It's the retail sales which actually tell you what the condition of the market is. And by doing that, I think we will better align ourselves to what is the actual market situation. And that should lead to some better cost results than what we are getting at present. So I don't think that there is too much to worry about. Sure, we will not get the kind of result we would have got if growth was 10% or something, but then you can't have it all.
Right. Devin, if I can come to you on this one. First, it was two-wheelers. We had commentary coming in from Bajaj Auto, which sounded soft. Now we have Maruti, numbers also soft, margins taking a bit of a hit. Your sense, auto is going to take, there's going to be more difficulty going forward, and how long, in your view?
It's a good question. I think how long? I don't know. I think the most important part about this particular company is the business model. The sub 10 lakh worth of vehicles, the volume has come down. So if actually I look at the result from the volume perspective, I find a bigger fall. But if you see, I think the above 10 lakhs worth of vehicle, the premiumization concept as we call it as, that number has remained relatively steady. And I think that number is likely to remain steady. It will not generate higher amount of volume, but it will remain relatively steady. That is what is the understanding coming up. Now, if one has to look at, I think, what could be the prospects under which two problems get solved. One problem is about the inventory that the industry is carrying, including Maruti. And the second problem is about, I think, the demand pickup, which may happen. The first part of the problem and the second part of the problem is relatively related with the rate of interest. Should you find, I think, the interest rate coming down, the pickup in the demand is likely to happen, and that could possibly clear part of the inventory in a faster process. How long it can take? I think my guess is that I think this quarter, the third quarter, due to the festive demand, I think some part of the inventory clearance would be seen. Maybe we'll get validated when on 1st November, the number comes out from the auto companies. But the more important part is that I think whether in this particular quarter, the larger amount of rationalization of inventory takes place, not too sure, as against which the production is coming down for the companies. So my guess is that the third quarter is unlikely to give any impressive performance from most of the OEM companies in the passenger vehicle segment. Fourth quarter may one have to see, I think, particularly from Maruti, because they're likely to launch the electric vehicle. And that's where probably I think the bus can change to a certain extent. So we'll have to wait and see as I see it from the third quarter to fourth quarter point of view.
Got all of that, Devin bhai, but would you at all go in and buy at this point, or would you wait and watch?
No, certainly wait and watch.
Got
I think it's not I'm not in hurry to buy immediately because I think the things are likely to get corrected on the valuations as well.
Point taken. Let me go to Ruchit. Ruchit, on the technical side of things, Maruti's results now behind us, 2.5% uptick on the stock today. Your expectations and your maybe your levels as well that you're watching out for.
I think before the numbers itself, we have seen some price-wise corrective phase in the stock. It made a high of around 13,270 at September end, just about a month ago. So I think price-wise, the downside seems to be very limited from here on because 11,000 to 10,600, it's a good long-term support range for the stock. But there's a possibility of some time-wise correction because if you look at many of the auto names, in last 1 year, this October is the first month where we have seen some price-wise correction. So I think these are the retracements of the long-term uptrend that are going on. So I think if one is only looking from a long-term perspective, then a gradual accumulation should be done on dips in the range of 10,600 to 11,000, where the risk-reward ratio would become favorable to take contra-buys.
Okay, time to slip into a short break. But before we do that, let's hear Morgan Stanley's Ridham Desai talk about the top 3 reasons for India's momentary growth slowdown and what he is watching out for this summer. Listen in.
This growth slowdown is down to, I think, 3 things. Okay, so the first is the Shraddh period, which shifted. So the year-on-year comparisons have got distorted. So that's the least important. It's behind us already. The second is the month of August, which had unusually strong showers, and that, of course, hurt demand and hurt output. That's also behind us. The third and most pertinent and lingering problem is government spending. So if you look at the first 5 months of this year, the fiscal deficit is tracking 3.4%. The budget was 4.9. Government spending is down 1.2% over last year. Government expenditure is 12% of GDP. It's very hard for the remaining 88% to overcome, when the remaining 88% is growing at 10-11%, to overcome 12% doing -1. And that's what we are seeing on the ground. People try to say it's urban slowdown, rural slowdown. It is plainly the lack of spending by the government. Now, the first quarter of this fiscal was attributed to the elections. So obviously during elections, spending slowed down. We lost the month of August to rains. Maybe September was partly affected by Shraddh. So hopefully the data improves in October. But clearly this is about government spend. Now here on this point, if the government has to go back to its fiscal target, and this is a really odd situation for India, because all of us who've been in India for a long time looking at government budgets, governments historically in this country have struggled to meet their fiscal targets. Usually they slip. Okay, we are actually in an inverse position right now, which is that we're going to actually beat our fiscal target. So we're going to have a deficit which is lower. So in order to get to 4.9%, I think if you do the math, the government spending for the remainder of this fiscal, which is starting October, has to be of the magnitude of 25% year on year. Okay, and if they manage to achieve that, the markets are in for a very big surprise on growth. Because I don't think the market is thinking in this fashion.
Got it.
Now, that is a spending capacity issue of the government, and maybe they don't do 25, maybe they do 20. But it's still a big jump from where we have been in the first half of this year. So I think this is what is ailing the market right now. And then, of course, as we've been writing actually for 2 months, and we were discussing outside in the studio, for 2 months I've been saying, things are getting a little frothy.
Especially in the spits.
There's a bunching up of, IPOs. So that bunching up of IPOs is also taking some of the appetite for secondary market away. And that happens from time to time. Neither of these are structural issues.
Right.
We are still in a structural bull market.
Some stocks are active in trade. We should pull up the intradays of Pratap Snacks. That one is just bumped up a little bit from the levels that it was trading at. So a bit of a spike coming in there. What's losing, Adani Wilmar is doing well too, a little bit. What's losing out though is Max Health maybe. MRF is a bit lower. Chennai Petro is, Max Health is gaining, sorry. Chennai Petro is the one which is losing out a bit. So watch out for that one. And amongst others, CDSL and Bank of Maharashtra are the ones which are spiking in trade as well. So a few stocks that have to be kept in mind, some spikes seen in some of those. We'll talk to Ruchit about some of these, but it's time to try and get in a sense of what is it that some of the earnings are expected to, and the big one to watch out for is Larsen & Toubro. It's set to report its September quarter numbers post-market hours today. Anushi gets us the details of what is it that is to be anticipated and to be watched out for. Anushi.
Well, coming to Larsen & Toubro and its Q2 FY25 expectations, it seems like a mixed picture that we are looking at. While revenue, expect that it may see a 12.9, that is almost 13% growth at 57,000 crore. Margins remain as a key watch out for the company, wherein EBITDA may decline about 12.7% and EBITDA and the margins may see a decline of about 310 basis points to 10.7% as compared to 13.8% last year. Net profit as a result of this may see about a 0.5% of a decline. But what is important is the order pipeline for the company. So if you look at Q1, there have been weaker orders that the company had posted. So weaker than expected orders in Q2 definitely remains as a possibility of what one should be watching out for. And other than that, in the international business also, the hydrocarbon business that is from the Saudi Arabia, that forms about 92% of the international orders for the company, remains as a focal point for the company's performance forward. Other than that, margin profile remain as a key watch out from if there is improvements happening in this front over here. Near-term outlook for margin profile and order prospect pipeline. Do note in the last few months, the stock has not performed well on the prospects of the order, on the prospects of the weaker order inflow growth. Coming to the FY25 guidance that we have seen, the company had guidance for a 10% of growth in order inflow, which they had retained in Q1, 15% revenue growth, and project and manufacturing segment margin guidance set at about 8.2 to 8.5%. So this is what the picture is looking for Larsen & Toubro for Q2 FY25.
Okay, well, watch out for Larsen & Toubro though. Devin, what if this one disappoints today? Could that be an issue?
Well, I think it's a challenge because on one side, I think this company has been having a visibility of orders for execution. At the same time, I think in a given quarter, the inflow of orders probably remains under check for a variety of reasons. And the last part, I think, is the margin. I think they have been always tight place on the margin front. So that's always a challenge. Any surprise on the margin front can actually re-rate the stock, in my understanding. But if it doesn't, then possibility of, I think, the stock underperforming remain very high. Even though I think you are having a larger order book, you execute well. But still, I think the market would like to see, I think, how the company can probably improve on the margin front. And that's where I think the re-rating can be counted if that happens.
Okay, so margins is something that at least Devin Bhai is suggesting everyone will be looking at. I want to quickly take a check on a few stocks which even Niraj suggested, but maybe one of them being Paradigm Phosphates, seeing a bit of a spike on the stock, up around 7.5% in trade today and headed higher. Ruchit, your view on this one?
Well, the broader trend looks very strong because it's one of the very few stocks, I think, which would be trading at its 52-week highs in this market. So the high top, high bottom structure has been resumed, and importantly, the volumes along with the price up moves are very good. So I think this should lead to further momentum in the near term. So the stock has now formed a strong support base around 90 to 88 range. Until that is intact, we can expect a continuation of the outperformance.
Phosphate, certainly, and big one there. Actually, some of the others, a CDSL, Ruchit, that has spiked in trade, and a few others that I just marked a little while earlier. Prestige has inched up a little bit too. There is strength in Chemplast, there is strength in Gujarat Ambuja Exports. Any of these?
So I think CDSL position looks quite positive. Whatever corrections that we have seen along with the broader markets, it has been more of a time-wise correction in the stock. When the stock is going up, the up moves are supported by good volumes, and on corrections, we are not witnessing any high volumes at all. So this indicates that it's just a time-wise correction, which is happening in the stock. The important support for the stock is around 1330, 1340. Technically, that was not broken in this correction. So I think till that is intact, if one is looking from a mid-term perspective, then this sideways move should be a good opportunity to accumulate this.
So I want to mark out an escorts, Niraj, from the highs of 3,700, stock now trading at 35.30 in a single day. Any views at all here? 2.5% higher, not reflecting that move all the way down. But it's an interesting one, Ruchit.
So seems a bit of a sideways move could be there in the broad range of 3,400 to 3750. So it needs to give a breakout above the 3,750 mark for any kind of price-wise pullback move to happen.
Okay, so 1% or 2% lower on that one. But new IPO on the way. Food and grocery delivery major Swiggy will deliver the IPO on November the 6th with a presence in both food delivery as well as quick commerce. Swiggy is aiming to raise around 11,500 crore. We spoke to the MD and CFO of Swiggy, and where they think the industry is headed, I believe that could likely be the key. 4,500 crore is going to be the fresh issue. Potential of the sector also important to understand. So listen into a slice of that.
And you rightly mentioned that quick commerce is an exciting category. I think we're still in the very, very early days of the evolution of the category. It feels like it's only been like 3.5 years since the first version came out, and it's going through a pretty quick transformation. I do think that we are still in relatively early days of the industry, and as consumers' needs get more and more visible and they keep changing, I think we're going to go through many, many shifts in what they want. I think what kind of categories are going to be available, how many cities it will be even possible to have a quick commerce business in, how many users will even find a use for it. I think we're breaking new ground as a category every year almost. And I think the excitement is real, and we're very excited about the advent of the category.
And do you think that even the pace at which quick commerce has grown has taken you by surprise?
I would say that, yeah, because in the beginning you don't even know how large a category is when you first put it out there. I think the consumer response has definitely been exciting, and the need is real, and that's what we're seeing from consumers based on whatever behavior that we see over the years.
Devin, quick commerce, Swiggy, an interesting play. Does it excite you?
Yes, I think on one side, the prospects are always looking very big, because I think the size of opportunity that they are catering to, both in the food segment as well as in the quick commerce segment, I think the size of opportunity is big. And this is probably one company which has used the consumer tech at a best level, as I would call it, as integrating each and every service platform that they have to offer, including the dine out and others. I think they have relatively done a good job on consumer tech front. Whether they would be in a position to bring down the losses, I think, which is quarterly basis, somewhere around 450 odd crores worth of losses that they're incurring. Whether it is going to come down immediately, I'm not too sure. But I think there is going to be increasing amount of competition, and the pressure is going to be there. On one side, the merchants are likely to squeeze you because the last mile delivery options are appearing many. On the other side, the consumer will resist to pay beyond a certain percentage fee. So it all depends on at what valuation I think you end up buying such kind of business. Prospects remain good. Valuation is the only challenge in this market today. Loss-making proposition and paying higher price is not easy, I think, at this point of time for any long-term investor.
All right, Devin, if I can stick with you with regard to Voltas, in terms of numbers, they've come off from the highs in terms of revenue last quarter, but maybe not the right way to look at it. But what's really disappointing for you in Voltas? Because stock obviously 4% lower, street not too happy, and margin recovery, doesn't look clean.
There is a pressure on the cost, I think, for sure, because I think certain commodities possibly have worked against, I think, most of these FMCG companies, if I may have to put it this way. And I think there is always, when in the institutional segment, when they are basically catering to the projects, there is always a competitive pressure which is built in as far as margins are concerned. So unless I think the pressure on cost eases, the margins are not going to look up smartly. At the same time, the growth in the business on a high base effect is going to be related to the growth in the economy. So if economy nominal growth is 12%, this company growing at 15% above, I think would be considered decent rate of growth if it sustains that level. And that's where probably I think one will have to see whether the margin is improving. Margin does not improve, then probably I think the stock will have to get derated, whatever you want to put across as. And the time correction will probably play out in this kind of businesses because they have seen a very smart rally in the prices. So maybe a time correction will definitely play out in coming few quarters as I see it.
Okay, Dabur numbers flashing at the bottom of your screen. Let's take a quick check. 6% lower on revenue. Also, we are seeing net profit down 18%. Some bit of margin contraction also coming into play. Stock obviously not reflecting the kind of numbers that we're seeing on your screen. But we're just waiting for that EBITDA number to come through to make sure that how all of this is really playing out. In terms of estimates, and I'm just trying to pull that out, the revenue number looks largely in line. And the profit after tax number also not so bad. The EBITDA margin has come in at 16.3% versus the 18.9% expected. So that's where, and profit after tax also around 5 to 6% lower than what estimates were building in, at around 450 crore. We've got a number of 420 crore on profit after tax. Well, the stock up 3% as we speak. If we can have the intraday graph, there you go. Seeing that spike on the stock as the numbers being digested. Clearly some margin contraction being seen. Is it? I'm going to quickly look at the margin number one more time as it flashes. But yeah, that's how the number is looking. Revenue down 6% at 3,030 crore. 3,040 crore was the analyst estimate. EBITDA at 553 crore versus the 575 crore number. And margins at 18.2% versus 18.9%. So not looking as bad, Niraj.
Yeah, I mean, well, you could argue that they could have done better, and I think Marico has spoiled people for choice by the commentary. So I think it will be important to understand from Dabur what the commentary is. Maybe the presentation has it, but yeah, bear this in mind that today is not that bad a day for FMCG. So actually, first a quick trade here, and then I'll get Devin Choksi's view. Ruchit, Dabur just perking up in trade. It's a high risk one, right? Because it could come off depending on the commentary, but purely on the charts, how do the charts look?
The charts have oversold setups because in last 1 month the stock has already corrected before the numbers. So the high was around 670 at the end of September. From 670 we are trading around 550 now. So possibility of a pullback move at least should be there. And on the higher side, 570, 575 is where the next resistance, the 200 DMA is placed. So charts seems that the momentum readings are oversold. So if any positive comments are there, then we can at least see a pullback move towards 575.
Devin, any thoughts before we let you go really on Dabur? Because FMCG seem to be, I mean, at least Marico did a good job on the commentary. We don't quite have Dabur's commentary, but revenues is down about 5.5%. EBITDA is down 16.3%. Seems to be in line with estimates though.
Yeah, Niraj, I think they are in line with estimate, of course. And for one, I would like to believe that the second quarter maybe I think a quarter in which maximum amount of the pain has been felt by most of these companies. On one side, I think they have seen the rural demand continuing, but the urban demand didn't pick up as much as I think they thought about. Maybe variety of reasons, of course. At the same time, I think the inventory portfolio carried, I think, good amount of high cost of input inventory, raw material inventory. So that is where probably I think the margins have come under pressure. And as I said, I think in the third and the fourth quarter, I believe that I think things are improving across both in rural as well as urban market. And to a greater extent, I think one would see relatively better number coming from FMCG compared to what we have seen second quarter. So maybe I would like to keep second quarter aside. I think not too much analyzing on this particular quarter per se for a variety of reasons. And believe that I think the normalization is happening in the trade, particularly for FMCG company, FMEG companies, where the consumer is spending money. I think the normalization should be seen third, fourth quarter from now on.
Devin bhai, constructive on FMCG, it seems?
Yes, I would like to remain positive, and I would like to remain positive for two reasons. One important, I think the demand scenario is likely to be steady to better. I think not giving up. And the second important part, I think whatever the input cost pressure that the companies have faced, they are likely to soften. And that is where probably I believe that the future, the coming quarters ahead, we are likely to see the relatively better numbers, both on margin as well as I think the top line front.
How would you play it, sir?
Little tough. I think the valuation is factoring most of the things today, yes. But I think given a choice, one would like to stay with a lever to begin with. I think that is going to give you relatively better amount of conviction to buy into. Of course, Reliance Retail, Reliance FMCG part, I think is a different story altogether. But if pure play FMCG listed one, I think the lever would be, I think, the first choice probably.
Devin, to you and yours, a very happy Diwali, prosperous New Year. Thank you so much for taking the time out and being with us today.
Thank you, Niraj. Thank you so much. And all of you, wish you a very happy Diwali as well.
That's Mr. Devin Choksi of DR Choksi Securities. We'll of course hear from him on the Murat trading session as well. But if you're wanting to know what to do and what are the stock ideas for today and for the next somewhat. So for today, we'll come to Ruchit in a moment. First, let me get my colleague Rucha to try and tell us what are the top stock ideas from brokerages. Rucha, maybe 2 or 3 brokerages if you can kind of sum it up.
Right, so I'll sum up for 3 brokerage houses. Number 1 for Axis Capital, the top pick is KPI Technologies. Well, it has given it a target price of 2,150 rupees, implying an upside of around 55% from the current levels. Well, KPIT is a pure play ER&D player which provides software services for largely automotive space, and therefore the brokerage house believes that this one is very well set to benefit from a recovery in the ER&D and the automotive space. Well, the stock is got listed in April 2019, and since then the stock has grown 12 times. Talking about revenue CAGR, that is compounded annual growth rate, well, it has given 17% CAGR in last 5 years. Second on my list is HDFC Securities top pick, that is L&T Finance. It has given it a target of 219 rupees with an upside of around 50%. Now, this is largely on the back of the merger announced by the company, because the merger of all its companies within itself will free up liquidity that can be deployed to lend to high yielding assets. Also, the 3,000 crore which will be freed from the former infrastructure debt fund will now be deployed in the liquid asset, and hence will fetch better yields than before. The stock got listed in April this year, but the share price is down about 10% since then. Lastly, ICICI Direct's top pick is NCC. It has given it a target of 400 rupees, implying an upside of around 35%. This is largely on the back of improved order flows. Largely, the prospects include order flows from Andhra Pradesh and Bihar, which is backed by the budget allocations given by the government this time. Also, the company has guided for an order booking of around 20,000 to 22,000 crore. And mind you that this range does not include the order prospects from Andhra Pradesh. Therefore, a very healthy order pipeline is what the brokerage house believes. Now, talking about the company, well, the company is largely focused on top line currently than the bottom line. The stock price has grown around 5 times in the last 5 years, while the revenue during the same time has given a 10% compounded annual growth rate. So these are the top 3 picks from top 3 brokerage houses.
Okay, thanks for that, Rucha. Ruchit, with that, BTST ideas very, very quickly. We have 5 minutes from close.
So I recommend going long on Pidilite over here. The risk reward ratio is favorable to take some long trades. The stock has seen some consolidation in last few trading sessions, and the RSI has given a positive crossovers today. So keeping a stock below 3,100, one can take long positions over there for potential targets around 3,300.
Ruchit, I have one more question. MCX as a stock has really cracked. Now, there is a deal round the corner is what has been told. Maybe Kotak sells, maybe somebody else, but the stock is down 6.5%. What do the charts suggest?
So Niraj, the stock has been an outperformer even in this corrective phase, but one cannot deny that it's too overbought after the recent run-up. There's been no corrective phase in this run-up. So I think there could be some pullback move to cool off at overbought setup. So the major support for short term will be around this 40-day EMA, which is coming around 5,950 to 6,008. So I think although the longer term trend remains positive, but short term pullback should not be ruled out.
Okay, Ruchit, thank you so much for joining in today, and to you and yours, a very happy Diwali and a prosperous New Year.
Thank you, Niraj. Wish you and your entire team the same.
Thank you so much, Ruchit. Great talking to you today. Okay, 2 minutes left for the markets to shut shop. Let's get in Hersh here as well, and let's start wrapping up the markets for you. Not the best of days. Banks in particular looking wobbly in trade. I wonder if we can pull up the bank Nifty winners and losers first, because I think that's the principal culprit. I mean, talk about everything else notwithstanding, but I think ICICI Bank, SBI, Kotak, BOB, all of those, and HDFC Bank doesn't feature in the percentage losers, but it's also in the red. So I think this is the reason why the market is sulked today, and this was the reason why the market was up yesterday. So quite a bit of turnaround from the banks in the session today, unfortunately. And then before Hersh takes it over, just a quick snapshot of the large caps, and just see, aside of banks, what else is sulked. So Cipla has been lower, life insurance stocks have been lower, SBI and HDFC Life, and IT has been mixed. So Infi and HCL Tech, they are heavyweights in the red. On contrasting that are a couple of IT names which have, like Wipro, which are marginally in the green. But yes, the main bulwarks today are FMCG and auto, which have done well, in addition to Adani Enterprises. But look at that, it's essentially FMCG and auto largely in the session today.
Yeah, broader markets, breadth looking good, Niraj. Overall, if you can look at the advanced decline there, the breadth not looking bad at all. 3:1, it's tapered a bit from those highs, but not looking bad. Let's pull up the mid cap and the small cap indices, see where those are settling in. Oh, a lot of those gains being now tapered. If you can pull up the intraday chart for both the mid cap, especially the mid cap index, the small cap index seems to have held up well. The mid cap index, and likely we'll see a bit of weakness starting to creep in. So yeah, that's how it's playing out. The small cap index holding fort, so that seems to be doing fairly well even now, 1.2% higher. Let's look at names. The BSE 500 in terms of the key winners and losers, and Capri Global on the back of numbers. Poonawalla FinCorp, what a comeback that is for that stock. We've closed for the day as well. Redington on the back of numbers again. So a large chunk of the gainers and losers on the back of numbers. Star Health as well, 5-star on the back of commentary coming through. MCX also is something we've discussed on the show, but out of time on this one, Niraj.
Yeah, just that the EMS players, Dixon, Amber, both of them looking slightly wobbly. But yes, with that, it's a wrap on this leg of the show. From everybody out here at Profit, wishing you great festive season. Thanks so much for tuning in.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Swiggy. Swiggy's IPO is coming out on November 6th, closes at on November 8th. Price between 371 and 390. The company is raising nearly 11,327 crores, which includes 4,500 crores of fresh issue. And joining me today is Sri Harsha Majeti, who is the MD and Group CEO of the company, and Rahul Botra, CFO of the company. Harsha, to begin with, you will be the second company in the food delivery and quick commerce to come into the market. How do you see the quick commerce market picking up from now? Because the market is really excited about the quick commerce, opportunity as we speak.
Awesome. Firstly, thank you so much, Ajit, for having us over today to talk about our story. And you rightly mentioned that quick commerce is an exciting category. I think we're still in the very, very early days of the evolution of the category. It feels like it's only been like 3.5 years since the first version came out, and it's going through a pretty quick transformation. I do think that we are still in relatively early days of the industry, and as consumers' needs get more and more visible and they keep changing, I think we're going to go through many, many shifts in what they want. I think what kind of categories are going to be available, how many cities it will be even possible to have a quick commerce business in, how many users will even find a use for it. I think we're breaking new ground as a category every year almost. And I think the excitement is real, and we're very excited about the advent of the category.
And do you think that even the pace at which quick commerce has grown has taken you by surprise?
I would say that, yeah, because in the beginning you don't even know how large a category is when you first put it out there. I think the consumer response has definitely been exciting, and the need is real, and that's what we're seeing from consumers based on whatever behavior that we see.
Not only consumer, your competitors in the offline market, the Kirana stores, now they are crying that you're taken away their businesses. So do you see that the pace at which the convenience commerce has now picked up is much more faster than envisaged by you at the time when you started this segment?
Look, I think it's still a very, very small part of the overall industry that we operate in. So overall, I would say that going by the first 3 years, I think the response of the consumers has definitely been higher than what we could have imagined. You don't imagine anything on day one. So that way, definitely adoption has been strong, and it will remain. I think it's a behavior that we're not going back from. So most certainly, I think quick commerce is here to stay, and consumers love it and want it.
Rahul, you've been able to tighten the margins, especially the loss margins which are there for quick commerce. It's around -3% compared to -6 in FY24. What is the kind of trajectory that you see for margins and the scale that at the scale that you're trying to bring it up?
Sure. See, overall, the margin itself is a derivative of the size of the business, also the monetization, as well as the cost that we are able to control in the business. I think the good news is most of the costs today that we see in the system are almost mimicking where steady state should be, right? So the platform itself, as I said, growing. Throughput per store is an important derivative or a variable. Average order value is a very, very important variable, and we have seen that continue to expand as the more and more categories get added, as larger SKU sizes get added on the platform. And monetization, we have also started to monetize on the advertising side of the business, which is very exciting. So these are the levers that has helped us to continue to shrink our negative contribution margin, and this trajectory will continue going forward.
I'm sure the investors will be asking you the trajectory to break even. Is there a trajectory that you're looking at?
I think it's kind of visible, right? See, in an FY23 we had a -23%, and FY24 -6%, and down to -3% in Q1. As the business has expanded, as our throughput per store has expanded, our monetization has expanded, our cost structures are looking closer to where steady state should be. So you should expect that continued trajectory going forward.
Harsha, you have around 550 dark stores and 32 cities which you are there. What is the kind of trajectory that you're seeing for your quick commerce as you expand, and which are the new cities that you're going to?
So we are adding stores as we speak, and we'll continue to do that. I think the way we think about stores is it's an outcome of the growth ambition, and we're definitely leaning forward here. We want to participate in the growth that that's coming over the next few years. And we are increasing our stores, but we don't start with the store number, but we make that an output of, let's say, the growth ambition, which is definitely to grow, keep pace with the category for sure. Now, as for stores themselves, ultimately from the time you decide to get into a new store to the actual launch, it's a 3-month window. So the key will be to be agile and keep looking at market development and make sure that we also develop the store network in tune with it.
So nearly 4,500 crores is fresh issue which you're going to use, a large part of it for quick commerce. Where are you going to deploy that fund?
No, I think it's also the expansion of dark stores. There's also the brand marketing expenses. We continue to see increased number of new users coming to the category, and that's one area we are going to invest. We are also going to invest in technology. I think both on the cloud infrastructure as well as the technological developments. So these are the large use of proceeds for the current issue.
And how many dark stores are you looking at?
So as we mentioned, dark store addition itself is a derivative of growth that we are seeing, and if the category accelerates, I think we should see faster expansion of stores.
Let me ask this question in another way. What is the normal cost of setting up a dark store?
It could vary depending on the size of the store. Could be anywhere between 65 to 85 lakhs per store.
Your store sizes are going up, for 4,000 plus square feet today at the end of June, and it's gradually going up because your SKU is also going up accordingly. How do you see this metrics going forward?
Yeah. See, one of the things that we have observed is that consumers are demanding a lot more from the category. If you look at our search results, where consumers are looking at not only adding to the grocery basket but now more increasingly to the non-grocery basket, and therefore we have expanded our range to now over close to 19,000 SKUs, which is doubled over the last 12 months. And as a derivative of that, the store size itself has expanded. And as we think of reimagining the future, I think if consumers are going to ask for more, the platform itself has to, also the size of the store and the SKU count will continue to grow in that fashion.
It's almost like a superstore in a local area, right? I mean, 4,000 square feet if the average one. So it's like opening superstores in neighborhood. To cater to this quick commerce demand.
Yeah, see, the model itself is evolving, right? Yeah. See, when we started off, we had launched a 2,500 square feet convenience store, more model around, say, the 7-Eleven or or a convenience store offering that you see globally. But as I said, the model has expanded and will continue to expand depending on how the consumer.
I think we're in the early phases of quick commerce over here. It's really early, and along the next few years, we will find out how much consumers want the newer categories that are being piloted. Players are piloting fashion. We piloted with pharmacy last year. I think we're going through a journey.
How is it doing? Pharmacy?
It's very, very early days, so okay. I think we won't have answers anytime soon. But I think we will go through an iterative process here where we'll keep putting new categories in front of the consumer, and some will work and some won't. And the key will be to keep expanding selection till a point that you're managing consumer satisfaction as well as, let's say, what you can actually do viably. That is the key.
You are in 32 cities in quick commerce. How do you select a city to enter?
I think, look, there are various indices, in terms of population, wealth. All of these demographics are a key part of how we choose cities. In addition, by virtue of having, let's say, the Swiggy app already in 600 plus cities, even in food delivery, that offers us some additional insights into which cities and which neighborhoods are more interesting to go after. So all of these coming together help us inform which cities to pilot.
That allows me to come into the food delivery business, where you are there in 600 odd cities there. How do you see that segment growing? Because while we have seen exponential growth in quick commerce, the food delivery business is expected to grow at 40-45% CAGR. So how do you see that growing now?
So look, I think in food delivery is also going to grow at an exciting, healthy pace. The reasons are a few, right? Apart from, let's say, growing population, changing demographic, increasing GDP per capita, I think all of this is going to lead to the restaurant industry itself growing at a very healthy pace, and it continues to grow. If you look at the underlying sectors for any online platforms, the restaurant industry is one of the fastest growing underlying industries. So we're going on top of a secular tailwind that is going to last very, very long. We think that we may already have a lot of restaurants in India, but we don't actually. Even we're witnessing the beginning of the restaurant industry in India. It is way smaller than any other country in the world, and our job is going to be to make sure that while being on top of this underlying rails, we want to go out and do more for our consumers to give them more affordability and unlock new consumption occasions or use cases to grow the category faster and faster. But I think it's an incredibly exciting secular tailwind that will last us many, many years, just because of macro factors.
Contributing margins in food delivery 6%. Is there enough scope to take it up higher than 6%?
So we delivered 6.4% in our quarter one, and it has been on constant journey of increase, both in terms of our monetization opportunities from the advertising side of the business, as well as reducing of our variable costs, where we continue to chip away. I think we can't give a specific number in the future for the future guidance, but you should expect the CM trajectory to continue to improve.
Given the fact that recently the platform fees have been increased by you as well, so that helps in increasing the contributing margin further?
I think, ultimately it's one of the levers that we have used to balance the overall equation. There is a very exciting offering called Swiggy One, which gives access to free deliveries on the platform, not only on food delivery but also on quick commerce. So we do think of monetizing ultimately from the consumers as a combination of the subscription program that we run, which gives access to the free deliveries, as well as the monetization on the platform fee.
Are you seeing increasing adaptability of Swiggy One, given that I was seeing some